Hey guys, it is Julie here with JT.Wealth. In today's video, we are going to take a look at the newest EV SPAC on the block, and that is Arrival. So let's get into it. Alright guys, welcome back and thank you so much for being here. Like I said, today we are chatting about Arrival, who is a UK electric van making company and the latest EV company to be going public via a reverse merger with SPAC or blank check company. So in today's video, we are going to take a look at the details of that merger and then just go through exactly who Arrival is as a company and what they do. And just before we get into all of that great info, this is just your friendly reminder that if you enjoy today's video, make sure you give it a big thumbs up and leave your thoughts in the comments down below. You can also check out some of the great links that we have in our description, which includes a link to my Patreon page, which will get you access to our Discord chat group, plus some other referral links if you're looking to start a new investment account. Webull just actually boosted their sign-up bonus. So between now and November 30th, you are getting 4 free stocks for opening up and funding your account. So make sure to check them out. All right, now let's get right into Arrival, as it was just announced that they are going to be going public via a reverse merger with CIIG Merger Corp, whose ticker is CIIC. The newly combined company will be listed on the NASDAQ under the new ticker ARVL. And of course, the CIIC stock has jumped upon news of this merger, and today we have seen it go up over 25%. So let's take a closer look at the overview of this transaction. So the business agreement was entered into on November 18th, and the transaction is expected to close in Q1 of 2021, after which time the CIIC stock will convert to the ARVL. The transaction implies a fully diluted pro forma enterprise value just shy of $5.4 billion. That represents a 0.4 time based on 2024 expected revenue of $14.1 billion. The transaction will be funded by a combination of CIIG cash held in a trust account, Arrival Group ordinary shares, and proceeds from the CIIG PIPE. The transaction is expected to result in $660 million of total proceeds raised to fund growth. Now, as we said, Arrival is an electric vehicle maker, but they are focused on the commercial space and not the consumer market. So their focus is on 2 main products, which is a van and a bus. Now we can go right to the investor presentation from Arrival's website to get some further details on the company. Now here are some high-level points about the company that we will break down further as we go on. So 4 vehicle designs are expected in market by 2023, with start of production for their first vehicle planned for Q4 in 2021. They have $1.2 billion in orders so far, and their unit economics enable price competitiveness and lower total cost of ownership to fossil fuel equivalents. Their game-changing micro factories enable flexible low capex production, and they are vertically integrated. So let's start by looking at that 4 vehicle lineup. That lineup includes their electric bus, their electric van, their large electric van, and then a small vehicle platform. All are said to be best-in-class zero-emission vehicles that will be competitively priced compared to ICE vehicles. Looking at their projected start of production timelines, we have the bus coming first in Q4 of 2021, followed by the van and large van in Q3 of 2022, and lastly the small vehicle platform in Q3 of 2023. Now the vehicle orders for their van of $1.2 billion is quite notable, so let's take a little bit closer look at that, as that is for their Arrival van, and it's said that there are 10,000 vehicle orders with the UPS, but with an option for an additional 10,000. So the orders worth the $1.2 billion includes that 10,000 plus the additional 10. So the actual confirmed orders, it sounds like, is just about 600 million. Still very impressive. Now they also have an agreement with Hyundai and Kia Motors, who have invested 100 million euros and have a business collaboration agreement with the company and joint development of vehicles using the Arrival platform. Now, another really exciting part of Arrival and what makes them unique is their production model and what they are calling micro factories. Now, every Arrival vehicle is produced in a small footprint, low-cost microfactory, which uses their new method of cell-based assembly instead of the traditional automotive productive line. They can be deployed quickly, making use of existing commercial spaces and producing any type of vehicle to meet demand. Each microfactory serves a city and its community, sourcing from the local area and developing custom vehicles for the region they're in. By localizing the supply chain, microfactories help to reduce the environmental impact of manufacturing. Now, Arrival is planning on making 3 to 4 of these factories per year. And from each factory, they are expecting to make about 10,000 vans per year from each. Each of these microfactories is able to produce different vehicle types as well. So looking at the benefits of Arrival's new method, their design and production along with its decentralized microfactory model enables the development of vehicles to be customized to local needs. It significantly reduced vehicle development time, facilitates a rapid response to shifts in demand for different vehicle types. Their anticipated profitability at low volumes removes traditional restrictions of legacy manufacturing, which only sees profitability at millions of units. Cities and communities benefit from products purpose-built for specific use cases in order to support each end market's unique geography, climate, socioeconomic structure. And Arrival is creating local solutions that address local needs to improve mobility ecosystems and revitalize communities. So I think the biggest takeaways there are these microfactories being able to shift their focus to different vehicle types quite easily. Plus, having profitability at low production amounts is huge. Looking at some of the financial details, their high volume and revenue growth is supported by that $1.2 billion in orders and notable commercial and strategic partnerships, with significant interest in their bus sector and further upside potential from taxi and small vehicle sales. Their early projected profitability, even at low volumes, really benefits their low-cost model. And like we said, a big benefit from their flexible and scalable cell-based assembly and lean company setup without those legacy costs. Now, hearing from founder and CEO of Arrival, Denis Sverdlov. With Arrival's products, our clients are not forced to compromise between being green and being cost efficient. Our focus on the whole EV ecosystem, new methods of design and production, and our enabling technologies are the key to driving down the cost of EVs and accelerating the transition to zero-emission transportation globally. And from the chairman and CEO of CIIG, Peter Canillo, Arrival's bold, game-changing approach to the production of electric vehicles made the company the clear winner in our search for a partner. Operating in stealth mode for 5 years, Denis and his visionary team have rewritten the rules of the game for the auto industry. Arrival's development of exceptional products using its pioneering technology and software alongside its groundbreaking new method of production can create an incredibly low TCO for customers, which we believe stands them apart from everyone else in the electric vehicle industry. We look excitedly to the future and to our partnership with Arrival's talented leadership team. Also noteworthy of Arrival is their extensive amount of patents, which includes 180 different innovations spread across different categories, including their van, bus, and small vehicle technology, as well as their microfactory and vehicle design flow innovations. And in regards to technologies, Arrival says that our technologies define us. Everything has been developed in-house, including materials, components, and softwares, all enabling our new method of manufacturing. So as the CEO of CIIG said, this company has been operating in stealth for the last 5 years and were founded in 2015. Currently, they have about 1,300 employees globally, mostly between the US and Europe. Now, their first 2 microfactories are coming in 2021, with one being in South Carolina here in the States and the second in Bicester in the UK. So a lot of exciting things coming down the road for Arrival in the next year or so. And there is a lot more of detailed things I could get into here, just trying to keep this high level so you guys have an idea who they are and what they're doing as a company. I know we've seen a lot of new EV companies coming to the market this year, and there's been a lot of hype surrounding them. I think Arrival is going to be no different. On that note, I would love to hear what you guys think about this latest EV company set to come to market via SPAC in 2021. Do you think that this one is going to be a good long-term investment? Are you just looking to ride up the hype on this stock as we close in on that merger date? Let me know your thoughts down below. You know, I always love hearing from you guys. And as always, these videos are never a suggestion to buy or sell any specific stock and are merely meant for entertainment and information purposes. Any trade should always be made based on your own due diligence. If you made it all the way to the end of the video here, make sure you give us a big thumbs up and that you're subscribed to the channel as well. Thank you so much for watching. I hope you have a wonderful day, and cheers.